All right, so just looking a little bit more at this actual Wall Street Journal article that came out on April 15th, which is the day that we're recording this. Matt, again, you put it in the notes, basically being a little more cynical about the article, and there's a couple pieces to this, which is this similar commentary when like the Wall Street Journal writes an article about multifamily because it's often like a degree separated from the industry.
So I was knee jerk. I was contrarian.
That's okay. I'm curious first. Because I can see both sides to the argument, and I'll take the journal's position just for the sake of the argument.
Yeah.
Just what were your issues or the thoughts, and then some other thoughts of some other industry folks of how tariffs. Like let's not be too quick to say tariffs are a good thing.
Yeah. Well, I think that. So I'll just take as a jumping off point this quote here. It says, the multifamily industry can pause most construction ahead of potential tariffs on building materials. That's the subtitle of this, the subheadline, I guess, of this article. And
what is that? I was confused. But
so I like the word choice can. So ideally, I don't think builders want to stop building. So that undercuts the headline somewhat. But I think that they're already framing this as a benefit to developers, seeing kind of the silver lining that, well, man, we overbuilt, and now we've got these tariffs that are going to prevent people from building, which is going to drive rents up, and because it'll lower the supply that gets delivered, and it'll drive rents up and it'll benefit us developers because we really want to get these things filled up with renters.
Their developments at the end of the day are going to be more valuable, because there's going to be less of them.
And they're talking about the cost of the renting on one side and then development on the other side. The rent's got to be higher than development, and that may mean that projects don't move forward because of that cost difference due to tariffs. But the point is, the people that are building right now, when they finish, maybe they'll be in a little better prospects than they would have because of maybe the implication here is a even stronger drop off in apartment starts or apartment permits, apartment construction.
I mean, the big story that the journal is trying to make is, look, new supply of apartments was coming down after a 50-year peak, and so most were of the opinion that will at some point drive some revenue, some rental growth, and assets should increase in value just because there's going to be much less developed. Yeah, that's not necessarily going to save the folks that are facing a loan maturity in the next couple months. Yeah, but it does make sense though that, look, over the long term, it's more expensive to build these things. Yeah, it used to cost, and I think the article, let's say it costs $250,000 per unit to build a multifamily property, but now it costs $300,000. You've essentially baked in to rebuild that. There's $50K of profit that you're cheaper than the competition. So you theoretically should be able to sell that closer to $300,000. Per
Good
unit.
Point.
So there should be some value creation just from a reduction of supply.
And I was I was thinking of more of it like, let's say you got 3 apartment buildings that are going up in the same area. If that price goes up per unit and one of them can't afford it, then the other 2 existing ones can charge more from renters. I was just thinking it more in terms of like which are going to move forward and which aren't. But I think probably more likely it'll shake out, especially in the investment market, where they will be able to sell for a lot more than maybe they would have.
Well, that's where I think the headline kind of misses like the actual effect of. So the true beneficiaries, I think, the tariffs aren't really the developers. I mean, there will be some because, like, if you're the only one delivering and you're able to make sense of it and you're able to get the equity.
And there was a developer that said he would.
They all say they will. For we'll get into that in a second. But the true beneficiaries are those that are buying existing assets or who already own existing assets, because you got your basis already locked in. And so if you've bought an apartment community for $150,000 per unit or $100,000 per unit, and to build something new it costs $300,000, well that's a huge spread. And the spread between rents, while there is a spread, is not as wide. Yeah. And so you can get some really attractive, cash flowing opportunities on your existing assets. And then because of that, at some point, that arbitrage is going to be shaved off,
Yeah.
and the values of the existing assets are going to rise and not meet the cost of new construction, but be back to like a relative spread between existing assets and new construction. Again, all this doesn't happen overnight. And we have to have a working market to start having more price discovery for this to actually be realized.
Yeah.
And so, again, it's like this, it's a little premature. It's like this could be absolutely the story in a year and a half or 2 years from now. But we have to get through this current period of volatility.
Yeah, and that was another kind of criticism that I had too, is they should also acknowledge the difficulty that it's probably going to be on operators if these tariffs are enacted. Not all parts come from the U.S., and there are probably some materials costs of just simple maintenance and operations may increase expenses for apartment owners.
Absolutely.
But so a lot does rely on rent growth, and I think that that's something that when I was thinking about these sources, and just for the past few weeks, I guess, as supply rush has gone down, I've been rolling around in my head like, wow, we got to pay attention to other stuff other than apartment supply. So maybe population and job growth are going to become more relevant. But the way that this goes, supply, if I think one of the underlying premises of this Wall Street Journal article is the apartment oversupply is going to hit, the tariffs are just going to cause the brakes to be hit so much quicker than it would otherwise. And that may benefit developers in some way that they frame, and we've just explained. Yeah. But I think that would be an interesting, and I think not unlikely, upshot to tariffs. We'll have to, on a deal-to-deal basis, determine on which developers are going to benefit.
Getting back to the point that you had made, or found it interesting in the article, they interviewed a developer.
Oh yeah,
who basically said like he's the one developer that's cutting against the grain that is deciding to continue to build. And I chuckled when I read that, but I'm like, every developer I speak to, they all say that they are going to continue to build.
Yeah,
and part of that is because they all want to continue to build, partially because that's what the business they're in, but also most developers rely on development fees to like stay in business.
Yeah.
Like the upside of selling a property, well, you might not sell a property for years, but you typically can't like live just on selling a property. You have to have those residual like development fees coming in and doing a project.
Okay.
So if you don't do a deal, like if you're not going to build this year,
yeah,
a lot of groups you're out of business. And so when you ask a developer, are you still planning on building this year or next year?
Yeah.
Anything other than yes is, I'm actually planning on going market.
Yeah.
I'm getting ready to go out of business.
Yeah.
So no developer is going to say that we're not building. They all want to. It's just that can they find the equity, the financing, the dollars to actually do it is a big question. Which again, with a weakening U.S. dollar, U.S. assets go on sale, we might see a inflow of foreign capital. Again, the United States maybe not as attractive today because of politics. But, just doing a little bit of research, I mean, like in the late 80s, from like mid 80s to the late to early 90s, like Japanese investors and other foreign investors, they made up 30% of multifamily investments over that period, mostly driven by a weaker dollar, which contributed to increasing of asset values. Because, in their mind, the yen was so much more valuable than the U.S. dollar. They can go in and take their currency and arbitrage by cash flowing real assets in a stable economy, stable market that is the United States. And even just given just some of the volatility we've seen, I know it's all crazy and we look like an emerging market. I think most of the world has confidence in the United States over a long-term period.
Well, and even just talking about what foreign countries hold the amount of U.S. debt. Number one is Japan, as you noted, and it's far and away above the other. The next one is China, but China's more or less tied with the U.K. And if you go down the list, it's very interesting. I think the third is like Luxembourg, and the Cayman Islands is up there too, which is like, well, I wonder who's in there.
Tax havens.
It's not necessarily correlated with the size of the economy necessarily, especially in Japan's case. But that is another layer of uncertainty that I think is coloring a lot of the discussions, a lot of the thinking that went into laying this.
The last piece, though, just while we're on the topic of winners and losers of tariffs, because we were talking before we started recording, it's not necessarily all good, all bad.
Yeah.
There's probably going to be some beneficiaries. There's going to be some losers, regardless of how the policy ends up shaking out. The Midwest still seems to be in the sweet spot.
Yeah.
Things are relatively affordable, already not that too expensive in the Midwest. Stable markets, some of the best performing operationally multifamily markets in the nation the last several years. But also Midwest is prime to take it if we do this onshoring of manufacturing. The Midwest is primarily where that's going to happen. It's going to be other places. It's going to be in Arizona too, but it's largely going to be in the Midwestern United States because they're affordable markets. There's room to build. It's relatively business friendly. Get permits to do it.
Yeah.
So there are definitely some beneficiaries, in the Midwest, which will be really, really interesting.
Yeah, and just the overall stability. It's also worth noting. Along with the economy facing this uncertainty, there are some places that are way more volatile than others when it comes to the apartment market.
I mean, I think if you're looking for a safe harbor investment, where can I get some shelter from the storm? I think Midwest multifamily at a reasonable price. I say that at a reasonable price because you got to buy it right.
Yeah,
seems like a really good place to be.